All right. Good morning, everybody, and welcome to another Mortgage Coach Tuesday interview. I am super pumped to be interviewing Jeremy Forcier for the 451st time. What's up, Jeremy?
What's up, Dave?
I don't know if it's been quite 451, but it's been a lot, brother. I am so grateful to get a chance to catch up with you.
Yeah, likewise, man. Thanks for always grateful to be on. Thanks for having me. And what a year passed and what a year we have ahead of us. So I'm super pumped to be here.
Yeah, no, I am super pumped. So we haven't talked this year, and so I'm really gonna drive this conversation like it's you and I catching up in public. I do want to push everybody listening to this, guys. It's a mastermind. Jeremy loves to go unscripted, so your questions are like a gift to both of us. So please,
Yes.
if you're watching this in Zoom, ask us questions, give us feedback. If you're in Facebook, ask us questions, give it feedback. And I promise this hour together will be even better. So Jeremy, first let's set the table on what you get, what you accomplished, what you're most proud of last year, and what your production numbers were, and then let's get into 2021.
Sure. So what I'm proud of most that I accomplished last year is that I stayed married and that she's happy with me, even in the midst of breaking records and doing all this stuff. So I'd say my most proud, honestly, moment of 2020 was that I didn't really work any more than I usually do. Which I don't hear from most people that I talk to. So that's probably my most proud moment. Now that if you unpackage that, that comes with all kinds of stuff. That means that efficiencies were really high, effectiveness was really high, discipline was all-time high. Like I didn't waste a second. And I learned a lot through COVID on how to, because we were forced to, right? How to be more effective without being able to go out and throw events and do that type of stuff. So I'd probably say that that was my most proud accomplishment of 2020 was happy wife, happy life. Spending a lot of time with the family, not working more than 55 hours a week. Um, Average, don't forget everything's an average. Okay, average about 55 hours, 60 hours a week, and really having a lot of fun. So yeah, we
Well,
broke all kinds of records, of course. I'm not most impressed with that, just because a lot of that was market driven. I'm really more impressed with how my team rallied, being super understaffed because we just weren't ready for it, right? I don't know who was, but we weren't, certainly, on the team, and how they all stepped up and all did unbelievable numbers for the size of the team that we have, and I couldn't have done it without them.
I could attest to that. Last year, I had the honor of having dinner with you and Kara a couple times. We did that site visit together, and that was magic, a premium site visit, which I don't know if we're going to be able to do it this year, Mortgage Coach community, but by next year, maybe we'll do, or maybe later on this year, we'll do another site visit with Jeremy Forcier. Dude, getting invited to your, what was it, company team party where you
Yeah.
celebrated your team and
It
you flew
was
Kelly
just
and
a
I out.
recharge, a little gratitude party. Like none of us had done anything together for, 7 months or something like that. And just to show thanks, get them recharged, show appreciation, have them bring spouses, have a great time, relax, celebrate some of the wins. Yeah, that was super, super fun.
Yeah, that was a good time. And guys, my big takeaway from the time I spent with Jeremy is just how team first he is. Like he understands his number one customer is his team. And he just shows that, whether it's his family, his team, and his number two client is his clients. I am curious, Jeremy, who do you consider your number two? Do you consider it your realtors or do you consider it your borrower? Like I know
Um,
your team is number one.
that's a really good question. I lump like my referral sources and clients kind of together because I feel that they're both clients. So they're equally as important to me. But I would have to say in 2020, because things change, by the way. It's okay to change, like who's number one, two, three, depending on market circumstances, time allotment. Last year, for sure, it was my clients. It was my past clients. It was my current clients would have been ranked as number two, just because when you have so many people coming into you, you need to service those people. I look at it like a restaurant, right? Like you have people on a wait list for an hour and a half to eat at your awesome restaurant. Like you better not be just trying to get more people waiting in line. You got to make sure you can service those tables, turn them around, and get the customers in that are patiently waiting. So if I had to go 1, 2, 3, it'd be team, clients, referral partners, like for
Yeah.
2020.
Yeah. And then I do think pivot to purchase, it's time to put that realtor at number 2 and get after it. And we'll get to that in a minute. So let's break down your production. What were your stats for last year?
Yeah, so personal production was awesome. It was 250 some odd million, 540 some odd loans or 57. I don't have the data right in front of me. I always forget because the numbers aren't that important to me. And then my team, so like my branch and satellite branches, et cetera, that I run and help run operations, leadership, et cetera. We did over 2,900 loans for just under 1.4 billion, 1,356,274,000. So I'm super proud of all of them and how they just crushed it in all the crazy circumstances, both good and bad. So the numbers were great. The numbers were really, really good. And I learned a lot from last year and how to scale appropriately and keep everyone's mental health intact, including my own, and how to get the most juice out of the orange. So it was a total growth year for me personally, professionally, mentally. And 2021 will be the physical transformation of Jeremy Forcier. So stay tuned.
Oh, we're gonna have to
Yeah.
unpack what that means in just a minute. For anyone who wants to know your team, walk us through the team that did over 500 loans and 152 million. Describe that team to us.
Yeah, sure. So it's nuanced and I'll explain it in complete detail, but I used to have my team, Jeremy Forcier's team, like my support staff. So when I say my team, I'm the only originating loan officer, right? I'm the only loan officer on quote unquote my team in my production, my personal production. I don't have junior loan officers, et cetera. Now I do have loan partners, so loan officer assistants to keep it really simple. And in the past, prior to 2 years ago-ish, maybe 2.5 years at this point, that team just supported me. So it was like 5 LOAs and 1 executive assistant, right? So that was 6 people that would help, disclose loans, gather all the documents, qualify people once the documents come in so I know how to present, et cetera, et cetera. Follow up on leads that haven't converted to appointments. Now, what's interesting is the transition over the last 2.5 years is that I actually share my team with 11 other loan officers now. So in my personal branch. So that means I don't have a team anymore. I don't have dedicated people towards me, just for me. And the reason I did that is we were hiring lots of LOAs, or I should say we weren't. I want my loan officers that partner with me, I want them to build their team. Like I know what it can do for their lives. Like I'm super team, pro team, right? And what I noticed is that I was either not doing a good job as a manager and leader and making sure they're hiring the right people or providing the correct training. And then B, of course, is that a lot of it falls on them as well with not being patient, having leadership skills, having management skills, and just not knowing how to do it, being new at it. So we were burning through lots of LOAs outside of my team. So I just decided to start sharing and do an experiment. Like loan officers, you're responsible for this. This is how you hand off. You do it the same way every single time. And this is where this person picks it up, and you will only be engaged if it has something to do with locking, pricing, or an issue where someone is frustrated or they say it's different than what you told them, et cetera. And it's crazy to me that my quote unquote team in the past, right, we were doing, 200, 300 loans a year with just my personal production, to see them last year, do almost a billion, like almost 800 million, I should say, just on a branch level with like what they're supporting with all the other loan officers, et cetera. And I didn't grow my team. I had one more person than I did 3 years ago that was just focused on my production. So long story short is I don't have my team anymore. We have the team, right? And the team supports myself and multiple other LOs. And that's what it looks like. Now, currently I've hired 4 people in the last 60 days with no experience. I want everyone to write that down. Okay, no experience, right? Who is now in training. One of them has actually closed 4 loans last month in her second full month as an LOA. That means doing income disclosures, you name it. So I'm going to say that again. No experience, closed 4 units last month, did income calculations, did all that stuff. So now we have 4 more people than we did last year. I'm looking at hiring 2 more currently, and we're just going to keep growing that out. So the team by the end of the year should be, let's call it 4 plus 6 is 10, another 4, 14 people supporting about 15 LOs, including myself, and hopefully doing around 800 million. So not necessarily growing the branch production, right? But keeping it the same with less people so that they don't burn out.
Love it. So you really want to get 800 million in branch under that ops team that you have that will still drive the Jeremy Forcier. What about units for your team? I remember last year or in 2019 you closed
299.
299 and your goal was
I'll
300.
never forget that. Yeah.
I know, I
That's
know.
one number that I won't forget. Yeah.
Yeah, yeah. And then 2020 the goal was 300.
Yeah.
What is the goal for 2021 aside from the 800 million in, call it, branch production?
301.
301. I love it. So
Yeah.
just one more. So you are this year focusing on growing your platform more than you are growing your personal team, right? I mean, that's a takeaway.
Yeah, I mean, I think that they grow together. That's the other big aha, right, that I've had is that when you're a player coach, meaning in personal production heavily and leading other people, um, it just goes hand in hand. When you're leading by example and you're doing all these things that you're telling other people to do, you just automatically grow. It's like a whole another level of accountability. Now that I'm happy to exceed my goals, by the way. So like I'm already tracking, 600 units or whatever after January. But that's not my
Would you
goal.
close in January? Would you close in January?
49 units.
Wow. Right on.
So
Congrats.
thanks, man. So that's not the goal though necessarily, right? It's okay to exceed goals. Um, so yes, I am focused more on the platform. I'm super focused on cultivating young talent, or any talent that has aptitude and a good attitude. And that's where I'm really focused because I think that the next 5 years in our business is going to look a lot different with technology, with underwriting, and it's going to be most of the support is going to be on a branch level, signing off conditions, like basically underwriting. And this is just my opinion, but I have seen the transition of that happening where underwriting is becoming reviewing rather than underwriting. And I don't think underwriting is going to go away or anything like that 100%. There's always going to be loan programs in certain scenarios that really, really need that. But I think that you're going to see the back end keep moving forward to the front end of the process. So 100% on, growing the platform, helping take LOs closer to their goals. If they are currently doing, 7 loans a month, they want to get 15, that's what I'm focused on. If they currently are doing 4 loans and want to do 8, that's what I'm focused on. If they're doing 20 loans and want to do 40, that's what I'm focused on. What does that look like? What does the support look like? What has to change for them in their communication pattern, in their process, how they're leading clients to a successful outcome? Like that's all in what I'm about in 2021.
Love it. Well, I do want to get this one question that just came in from Lisa. And then I do want to, within 5-ish minutes, get into your 2021 game plan. But Lisa asked, how do you train LOAs with no experience? Just give us a minute or two, high level on
Yeah,
that.
really slowly. So it's pretty simple. Now, I'm going to give 2 different contexts. One is that you already have an LOA and you're training a new one, and the other one is you have no LOA, right? And you are training your first one. So if you have an LOA already, I train in a buddy system format. All right. So basically, the first 2 weeks is them just doing their corporate training that they have to go through. And I let them know that, hey, it's going to be, maybe a little boring. You might not feel like you have something to do all the time outside of the trainings, and that's okay. Do you have Facebook? They say yes. Do you have Instagram? Do you say yes? It's okay if you're on it if you have an hour to kill. don't worry. So making them really comfortable is super, super important when they're going through really basic training and they're going to have gaps, right? Now, the second phase of that is hooking them up in a buddy system. That means that if you have an LOA, that your current LOA is going to be responsible for training them. And we only train them on one thing per week. Okay, so I'm going to say that again. We only train them on one thing per week. Outside of that one thing, they're just shadowing. They're literally watching for 30 days. They're watching what the person does. They're watching the questions that are asked, how they input things, how they calculate income, how they ask me questions. And that's how I train, right? And then they have a download, a debrief at the end of the day where they can ask their questions. So I don't want the LOA getting super bogged down while they're doing everything. I literally just want the person to be shadowed, engaged, and writing down questions. That happens for about 3 to 4 weeks. Okay, for about 30 days. Now, after the 30-day mark, we start doing what's called um, watch, do, watch, do, watch, do, watch, do. What that means is if I'm going to train them on our process to clean up a loan application after I have already taken the loan app, right? So I've taken the loan app and they're just going to verify all the information. It's an introductory call with the client to go over the items that are really important to make sure that I put all the right information in there. Then what they do is they watch the LOA do it or they watch me do it, okay? And then I watch them do it. And we do that 5 times. So they watch me 5 times, I watch them 5 times, and I give them feedback. Okay, and I give them feedback. So that's how I train. It's the same if you don't have an LOA, it would just be you training them. Train them on one thing at a time, and it depends on what you want this person to do. If this person is being hired just to like be in your email, for example, and just to check your voicemails and transcribe them to you every hour and call people back and schedule appointments, that's a really easy thing to train on, by the way. Like if you don't have an LOA currently, how do we call people back? What do we say? How do we put it in the calendar? What emails can you automatically delete every single time that you see? What emails do you need to respond to as me every single time that you see? Like a new referral, for example. What does the referral template look like? Let's set it up in your signature so you can just plop it in and drop it down. So one thing at a time is the key. 30 days just shadowing. And then when you're really getting them into doing things, it's they watch you 5 times, you watch them 5 times, and then they should be on their way.
Love it. And just one of the things that's just a good reminder, all of us, myself included, when we're training people, often we'll say, hey, watch us do this and then do it. But we're not now watching them and
Right.
then doing that cycle 5 times. So I thought that was a really good reminder for everybody. And I do find a lot of people in the mortgage coach community are scaling their team. You know,
Yeah.
they're hiring LOAs, they're bringing in new loan officers. I get more questions than ever from new loan officers coming into the business. What's the fastest way to learn mortgage coach? We'll close out with some of that, guys. Fastest way to learn mortgage coach and the fastest way to upgrade an LOA to using mortgage coach. So let's get into the next year. And I know that when you and I were talking about, hey, what are we gonna talk about, and how are we gonna promote this into the community? You said something like, how not to screw up
Yeah.
2021. What were you referring to there?
Yeah. I mean, I think that we just went on such a wild run that like number one, we can't let our ego get in the way of our success in 2021. We have to remember that that was a gift and it's awesome that was given to us. And yes, we all worked really, really hard, but we are not the market. That is not who we are. Right? That is not who we are. That's not our identity. So I think keeping my ego in check, that I accomplished some amazing things, but knowing that number one, I didn't do it alone. Number two, it was a gift, and that I can't buy into my own BS about how great I am or how great the team was. Have to honor that, but I don't want to get caught up in it. So you don't want to mess it up. You don't want to sit on your hands. You want to make sure that you are reaching out to people still, your past clients, et cetera, your referral partners. And even if you're stretched super thin, like, how do I explain this? So the gift that was given, I coach a lot of people, or people will contact me and want to set up a call, give them advice, and I'm always open to it. And what I hear a lot is that like, man, they're so stressed because I'm not doing the stuff I'm supposed to be doing. I'm not calling, realtors every single week. I'm not calling financial planners. I can't even call my past clients. And I always tell them, me neither. Like, you guys, there comes a point where you have to realize that you have to make decisions and not beat yourself up about it, but also find hacks on how to stay in touch with the people that you want to be in touch with, and to still add value. So I'll give you a couple examples, right? Is that I was really bad about consistently calling my partners this last year, just from the sheer volume of people that were just coming in and being referred to me. So I did a pivot and I said, okay, I'm going to focus all my energy on current clients that are in process and getting referrals from them. And then I'm going to only focus on the agents that I really want to work with, that I really, really like, and do my best to stay engaged with them, as far as an email, every month, a phone call with stuff that's in process that we're working on, update on leads. And I had to make it more efficient from a process standpoint. Now, I also decided that like, I really don't want to work with people that I don't like. I mean, I just don't anymore. And I think that's important for everyone to hear. Now, if you're new in the business, let's say 3 years, 5 years or less, I consider that new still in the business. Like, I'm not saying that you're going to only work with people that you really, really like. All right. What I'm saying is that figure out who you like to work with, and then pour more energy into that. Right. So like, I have categories of business where I'm like ABC, like for my referral partners. Like, A referral partners are, I really like them a lot, right? And I enjoy speaking with them, working with them, interacting with them. We're morally aligned. We're in alignment with in our businesses and communication, et cetera. They have a good heart, et cetera. I have people that are B, which may be like business only, right? So it's a business relationship where maybe I don't want to hang out and have pizza with them or something like that, right? But I don't mind servicing their business. Like, they're still cool to work with. They're good to work with, but we're not going to have like some crazy, super deep connected relationship on a personal level, but I can still be of great service to them because this is a business at the end of the day, right? And then you have C, like people that you want to work with, right? That maybe you're not right now, and those would be the people that I'm pursuing. So just having categories and making sure that we're appropriately placing it, and then figuring out ways to stay in touch. Like, for example, I realized that my gifting program was just awful. Okay, was just awful last year. My gratitude program was really, really bad. So I had to address that at the end of the year when I reflected back, and go through and just did gratitude gifts for all the clients that I closed last year, right? I'm talking about simple stuff like hot cocoa bombs. You guys know what those are? They're like on the stick, like a popsicle stick, and it's like a big hot chocolate chunk at the bottom. So I sent that to everyone that we did a closing for last year, just with a note that said 2020 was a weird year, right? It was really sweet working with you, right? Jeremy Forcier, thank you so much. Super simple, right? Just to show more gratitude and make sure that people know they are important and that we do recognize it. But finding those hacks and how you can do that is really, really, really important. But the reality is that you have to work in your current reality, right? That's number one, is understanding your current reality and not beating yourself up over the fact that maybe you're not doing some things. That's cool. Notice it. And that's something we have to get back to, but don't sprint back to it. Like, I wouldn't write down right now, I need to be calling 40 realtors no matter what, and prospecting 40 new realtors every single week. Like, that's not in alignment from a time standpoint for me right now. From an energy standpoint, it's just not going to work. It's going to cause more frustration. So looking at your pipeline, your time, where you're wasting time, where you're spending time, and creating your plan of what you're going to do around that. Like, I wrote down today, I'm going to call 3, not 40, 3. That's what I wrote down today. I'm going to call 3 agents that I really like, that I want to continue to work with today. Taking small chunks is okay, because if you do that every single week, that's 150 potential people in a year. It doesn't have to be some crazy big number that you beat yourself up over. So yeah, anyhow, I don't even
Yeah,
know what your question was, but I just rambled on for like 5 minutes.
yeah. Well, it was a great ramble, and I do want to make sure folks caught the fact that Jeremy closed 50 loans last month, 49, and he's still calling 3 realtors today. So there's not a busier guy out there. I know loan officers that probably closed less than 5 loans that probably aren't closing column 3 realtors today. So I do want to make sure, depending on how much business you have, you should be making more calls than that. And
Yes.
I have a question in a minute, but you're always prospecting.
Yeah.
Jeremy, for if someone's new in the business
Yeah.
or they're closing less than 60 loans a year,
Mhm.
whatever you say that, like, hey, there's a next level, how much prospecting should they be doing to get started? And what are some good goals? So now, again, for people who are closing over 100 loans a year, depending on what the size of their team is, if you're a solo loan officer closing 100 loans and you don't have a team,
Yeah.
maybe it's time to start building a team. But like, what is that foundational prospecting core that people
Yeah.
should have?
So here's what's interesting is that it never changes. Okay. What changes is how much time you have. So I'm a big fan of breaking the system, because when you break the system, that means that you're winning. And I'm going to go back to what I said previously. I want everyone just to really understand this. Don't beat yourself up over what you're not doing. Period. Don't do that. Just make changes. That's it. Like, just make changes and start doing it. So foundationally, for me, if I was brand new in the industry, this is the assignment that I give people that are brand new, or even people that are struggling, and even if they've been in the business for 20 years. And I always tell them, hey, I want you to write down a list. I want you to pretend you're getting married. It doesn't matter if you're married or not. This is a fantasy. Okay. Let's pretend that you're getting married in 6 months and you have no budget blowout wedding planned, that you can invite literally everyone that you want. Acquaintances, super cool people, people that you want to get to know, people that you're friends with, your family, extended, for anyone you can think of. And I want you to write down that dream wedding list. Okay. Start there. Call all of those people first. Okay. It's amazing. It will generate an extra 5 transactions for you, whether you're doing 100 deals a year or 5 deals a year. It'll generate 5 deals a month for you if you just do that. I promise you. And ask for referrals and ask for introductions. So if I'm looking at a just real basic model that I don't think ever changes, it's making sure you're prospecting at least 20 hours a week. Okay. So make sure you're prospecting at least 20 hours a week. Shooting for 60 great conversations a week. That means actual talk tos, talking to people, 60 great conversations a week. Trying to meet with 15 people face to face, and I will get into this, that I know that's not possible. It's not possible for me, just so you know. Nor, I'm shut down in where I live still. So Zoom meetings are face to face. And if you're not going to do any face to face, you want to put your calls from 60 to 100 talk tos a week. Okay. To 100 talk tos a week if you're not going to meet with anyone face to face. You should be writing 10 thank you cards, or as I call them, gratitude cards, every single week. 10 gratitude cards. Even if you're not thanking someone for a referral, you're not thanking them for closed business, you could literally write anyone a card of gratitude that you're thinking about, that you want to be in a relationship with, that you want to work with. Writing handwritten notes will always pass the test of time. And then making more videos than ever. Okay, so I mean, that's why I love Mortgage Coach. It doesn't force me, it's just part of my process, but it does force you to make a video and be impactful when you're doing a presentation. I also send tons of one-to-one videos using CoVideo app, right? And you don't even have to use CoVideo. If you have an iPhone, you can just make a video and text it to someone. So making more and more videos, and I'm forcing my team, by the way, Dave, to do that. They all owe me a video by Friday. My processing team, my LOAs, I'm forcing them to use video because it forces more connection, and it's more replicable, and it just transfers trust a whole lot faster. So if I was a new LO or not, if you're not prospecting 20 hours plus a week, and I can define that if anyone wants to ask a question, but for the sake of time, I'll move forward. 20 hours a week minimum. That gives you 20 to 30 hours a week to work in your business if you're really busy. And then, like a oversimplified, I'm an oversimplier. If you have any open space in your calendar and you don't have stuff to work on, that should be prospecting time. Like, that's the simplest answer, honestly, out of all of them, is that if you have a clean slate all day and you have no appointments, you basically should prospect probably 8 hours a day. Okay. The purpose of prospecting is to fill up the calendar with appointments for people that could buy from your service. That is the whole point of using your calendar and doing prospecting. Now, if you prospect so much that your calendar's full, don't beat yourself up once again. That like, oh my God, I didn't get to my calls this week. That's the point, you guys. If you looked at my calendar, you would be like, I don't know how he does anything. Like, I don't even know how it happens, but that's the whole point. I'm not doing 60 outbound calls a week right now because I have scheduled 12 to 15 every day already, but that's green time. That's prospecting time. When you're talking to someone that can buy your service or has a need that you can help them with, don't forget that that's green time. That's not working in your business. That's working on your business. That's literally green time. When you're talking to someone that you could help, that is green time. So don't get over focused on 20 hours only of outbound type marketing or communication or prospecting. When you are engaged with a person one-on-one, guess what? You're on stage. That's prospecting. And you have an opportunity right there to be fully engaged, and count that as green time.
So one stat I want to make sure we help the community get focused on. Now, again, guys, I'm asking this question of a guy who's created 6,913 total cost analysis. And I can see your stats here. You've created 85 TCAs in the last 30 days. But what should be the total cost analysis goal for loan officers? Like how many, how do they scorecard that in your opinion?
Yeah, sure. So Dave, let's pretend that you're a loan officer for a second. Okay. How many loan applications did you take in the last 30 days?
14.
Yeah, so you should have 14 total cost analysis done. It's that simple. Everyone that gets a loan application gets a total cost analysis. Now, outside of that, let's say that you don't have 14, right? And you want to get better at it. A big thing I'm focused on this year is replication and replacement. So replication would be doing the same thing every single time and getting leads from the leads that we already have. And replacement would be one example of replacement would be people that I didn't convert that were on the fence, or their TBDs, their pre-approvals that didn't go into contract yet. Go back and do total cost analysis for them. Like if you have a team and you feel like you don't have time, teach them how to do all the basic inputs on a total cost analysis and leverage that. If you want to do them yourself, just because I do them myself, I really do have to get my team learning how to do it at some point, but I got to hire some more people. So if you're doing them yourself, what better way to engage with someone that maybe you've lost touch with? I did 2 of them this morning. I have them right here, templates all set up. I have all the emails already set up. All I have to do is drop in the links. I did all of them this morning. I did like 5. I have 2 set up right here where I haven't recorded the video yet because I was wearing a beanie and I was just like, it was like 5:30 in the morning. I didn't want to seem like a psycho. So, but I did it all. Now I just have to go click the record button, and I'm sending them out to TBDs who I haven't heard from in over 60 days. Right? Hey, this is a quick update on where things are at right now, how rates are trading. Let me know if you have any questions. Engage them through data and wow them, because no one else is.
So guys, if you are listening to this and you're new to Mortgage Coach, that's one of the first ways we teach people is it's harder. Like if you've never done a total cost analysis and had that conversation, you're brand new hot lead that you got to get after and get to it. That may not be the first time you use Mortgage Coach. How about using Mortgage Coach and going back to all your TBDs and using it as a re-engagement? That's easy. And if you're a team leader, you can assign someone to that. And to Jeremy's point, I love the strategy of going back to all your fence sitter refis or all the refis that you just lost track of. If you have a team, assign someone to it. But guys, Jeremy, would you agree that's green time? Like if you are a loan officer,
100% green time.
Yeah, that's like bright green time.
That is the greenest of green time. So that's why it's just a non-negotiable for me in my process and business, and always will be. I don't see a time where it will not be. That's green time. That's influence, you guys. Okay, that's influence. That's how you influence people.
They speak to that real quick, because I think that's something you do so well. You're super, because I've done a site visit with you. I've shadowed you multiple times when you're doing selling, and you do such a great job of what you say outside of Mortgage Coach and then what you do inside of Mortgage Coach. Would you just walk people through that? Because I think if more loan officers can have that kind of influence, they can become more effective. And if they become more effective, they become more confident. And then it's just this perpetual snowball rolling down a hill. So walk us through that a little bit.
Like through like how to influence?
I want you, well, think of it. You're talking to a borrower. What are you
Yeah.
saying pre-mortgage coach?
Yep.
What are you saying in mortgage coach to
Cool.
have the optimal influence and value?
Yeah. So there's always context and nuances, so I always want to make sure that I always say that, right? But if I was to boil it down, number one is that what we're really talking about is leadership here, right? And you have to lead yourself first before you can lead other people, even a client. And leadership is just defined as like the decisions you make and the influence you have, right? That's it. That's right out of the 7 Perspectives of Effective Leaders by Daniel Harkavy. Like that's it when you boil it down. And if you really want to influence people, the number one thing you have to be great at first, and I answered this in a LinkedIn post that I did recently where someone asked me, well, how do you, because I think you have to be effective before you can be efficient. I just do. I think you have to be effective. You have to learn to be effective first before you can create efficiencies. Most people that say they want efficiencies are saying that I don't want to do the work. That's what they're saying subconscious. I want it to be easy. So we have to learn to be effective, and that's how you influence people. So the easiest way to be effective, number one, is be a great listener. Be a great listener. Like that's the number one way to be effective is you have to be a great listener first, because people will tell you exactly what they know and don't know and what they want. So pre mortgage coach total cost analysis, favorite script of all time, I probably said it 42 times on here, is great to meet you, Dave. You were referred to me from Shandi. I love her. How did you meet her? You tell me. And then I say, she's awesome. You're so lucky to be working with her or to know her. So Dave, tell me, how can I help you? Tell me about your situation and shut up. Listen. Don't think about what you're going to say. Number two is take great notes. When you're listening, take great notes about what they're saying. Even if you're an LO who doesn't know anything about anything, you think that, Fannie Mae is spelled with a Y instead of an IE, it's okay. Just listen. They will tell you what they are looking for. Okay. The number three thing to be great influencer is that, so number one, you're listening. Number two is you're taking notes. Number three is that you know where to go to get the information you need if you don't know it. Okay, that's number three. So notice I still haven't said you got to be an expert loan out. You have to know every guideline. I haven't said any of that, right? But to influence, if you listen, take great notes, and then you know where to go find the information, it would sound something like this. Hey, Dave, that's a great question. I say it constantly, by the way. When anyone asks you a question ever, you always respond with, hey, that's a great question, because you're validating them. They're nervous. Remember, they know less than you no matter what. Okay. And then you have to know where to go get that information if you don't know. And then number five is how to communicate effectively, right? So communicate effectively is how to set the right expectations from a time frame, getting answers to people, and leading them down a path for success. So pre total cost analysis, I'm listening, I'm taking notes of what they want to do. I'm asking great questions if they're not giving me any information to get them talking. And then I always ask them this. So Dave, are there any other specific questions that I can answer while I'm with you today before I let you know how the next steps will work and what the process looks like?
I'm good.
Cool. So number one is that if Dave did had a question, I'd answer it. Okay. I would say, yeah, no problem. That's a great question. And I'd answer the question. And then I would say again, hey, Dave, are there anything else? Is there any other specific? I will literally say it until Dave says no, like he just did. Great. Now I'm in control. Okay. So now I get to be the expert and tell them exactly what's going to happen. So Dave, here's what we're going to do. I'm going to send you a customer questionnaire to fill out. It asks you really simple stuff like where you work, how you spell your name correctly, what your estimated annual income is, super simple stuff like that. It's going to take you about 10 or 15 minutes. Once you complete that, we'll be automatically notified here in my office, and either myself or one of my team members is going to reach out to you just to tidy up the information to make sure we have all the correct data in the right spots. Once that's complete, I'm going to create for you a total cost analysis presentation that's going to walk you through multiple options outlining interest rates, closing costs, and what I think may be the best fit for you. So that way you can ask me great questions and we can go from there.
Pure gold. So simple, but yet so powerful.
That's it. That's how you influence is confidence. Okay. And the more confidence you can learn to have, not arrogance, but confidence, right? I got one of the coolest reviews the other day, and the review wasn't even directly sent to me. The person that referred me, who's a client of mine, client referred me someone, and then they're like best friends. And he told me, he was like, hey, Megan called me. We were texting back and forth last weekend, and she said that she's talking to you. And she said, man, that you seem like such a trustworthy guy, and that you really feel, she feels that you truly have your best interest right in line for her. That's influence, right? And it's setting the right expectations of doing that, being calm. There's nothing to sell. I don't ever get into interest rates and fees when I'm on the phone and I don't have any type of idea what their credit score is, what their debt to income ratio is. I don't know if they've had a BK yet. I don't know any of that yet. So really, I'm just building rapport and setting the expectations of the steps that will happen so that then when they get the total cost analysis, number one, they're expecting it. My favorite part is the accountability that comes with that too, right? I've had plenty of people that will email me. Maybe I've been 3 days from getting them what they requested. And they're like, hey, when are we going to get that presentation that you talked about with the video walking me, you know? So it holds me accountable too, that I have to do it. People were waiting for it. So the best way to influence is just listen with a full heart, listen with an open ear, take great notes, find answers to their questions if you don't know it, and set the right expectations as far as what's going to happen and what they can expect.
So let's take this now into a total cost analysis because I know you've got a couple on your screen, or I have them on my screen. And if you could just, do you have them on your screen? Can you show them?
Yeah, I can bring them up. Which one do you want me to go over first?
Whichever one you want. I mean, since we talked about purchase and TBD, and I do think it's a pivot to purchase market, guys, you need to make sure all of your pre-approvals and TBDs have a mortgage coach TCA, whether you did it at the beginning or whether you're going back and you're engaging with them. But just walk us through something simple so that they can at least get a feel for what's it like to be on the other side of Jeremy Forcier's
You got it.
pre-approval purchase experience, and then maybe we'll show one refi. And then, guys, remember, if you have questions, put them in comments. If we don't get to them during the call, we'll make sure we answer them afterwards. Uh,
Cool.
and we do appreciate all the feedback, everybody.
All right, so can you guys see my screen okay?
We can.
All right, cool. So this is an example of a very simple pre-approval. So this is someone that we had just pre-approved last week, and they're looking to keep their payments between $2,000 and $2,500 a month, and they want to come out with right around $50,000 to $60,000 cash to close. So the reason I knew all that is because I asked them. Okay, this goes back to ask, listen, take notes, and then you can give people what they're asking for, right? So that was it. That was the context. So we took their loan application, got it all cleaned up. A day and a half later, I created this. Now, I already shut off the video just because it was, you know, here it is, just so you can see it. So there is a video of me down here in the corner walking them through this, all right? So the context of this is I'm just showing them the difference between a 425 and $450,000 purchase price. Okay, that's the context, right? And then when I'm walking them through it, I'm going through and just literally reading what's on here. So I'm not crazy fancy, you guys. Like I'm just reading. I'm going to pretend that I'm recording the video right now, okay? So this is what it would sound like. Uh, Hey, Sarah and Ron, it's Jeremy Forcier with Cross Country Mortgage. Congratulations on getting pre-approved. We're super honored to serve you. What I've done here today is just created a presentation for you that's going to walk you through what $25,000 increments look like in your purchase price, how that affects your monthly payment, and your total cash to close. So I'm going to go ahead and walk you through the summary section. You'll see 3 vertical columns there. In the first column is a $400,000 purchase price with a $360,000 loan amount at 2.99% interest rate on a 30-year fixed rate mortgage. This is all based on a 661 credit score with the down payment that you referenced you wanted to put down. At 2.99%, your total monthly payment, including principal, interest, taxes, insurance, and mortgage insurance, is going to be right around $2,078.83. Now, under the cash to close section, that is your down payment and all closing costs, including all the third-party stuff like title, escrow, appraisal, the collection of property taxes up front to set up your impound account. If you got more questions about that, just let me know. I can explain. You're looking at about a total cash out of pocket of $52,160. Now in the second column is that if you ended up buying a house that was $425,000, I showed you that your monthly payments would be $2,202.51, and your cash to close total down payment, all closing costs again, would be around $54,885. In the third column, I showed you $450,000 purchase price, payments estimated at $2339.69, cash to close at $57,610. So what I'm showing you here is that basically for every $25,000 that you move up or down, the difference in monthly payments is about $137 a month. That way, when you're looking at properties, you can very easily calculate, like, what is my estimated payment going to be? Right? If I'm going to buy a $500,000 home, your payments are going to be, about $280 more a month than the $450,000 option. That way you can budget correctly, you know exactly what you're looking at. So if you have any questions whatsoever, feel free to shoot me an email, shoot me a text, call me. We can schedule a time to chat, and I really look forward to working with you. Have a great day. That's it.
Boom. And guys, that's effective, and that is connection. He's showing the family he listened, he's leveraging his time. What are some of the most common purchase TCAs that you provide? That was purchase price options.
Yep.
What are a few of the other, call it, common purchase TCAs?
So let's say a purchase in contract, okay? Is that what you mean?
Yeah, or TBD. Like, I know I've talked to you before, and you've said I often put different points and rates.
Yeah.
Like, if I know I'm competing with a big bank or online lender that's going to quote 2 points, I'm going to put rate options.
Cool.
You still do that a lot?
Yeah, so this is where context comes into play again, okay? So I'll find one and pull it up here while I'm answering this question, but it's what I'm listening to when I'm talking to people, first of all. So if someone's really clear on what their purchase price range is and what their down payment is, I'm going to show them multiple options at that purchase price, right? With different rates and fee structures. In the one that I just showed you, they didn't really know. They're like, we don't know. Like, we just want to know, like, 2,500 or less, 2,000 to 2,500. So the context is of utmost importance when you're doing this stuff.
What One question, and you don't need to show it if you want to, fine. But one guy just put in, or someone just put in, what if there's no options? Like, they just want an FHA 3% down. How do you do that?
There are options still with an FHA with 3% down. So that would be a rate option, right? Rather than a purchase price option. So it's always good to show multiple options no matter what, okay? So it's really, really important that you show a minimum of 2, in my opinion. But I like to go 2 to 3, right, on all of the options. So I'm gonna share my screen again, and I have one here.
And while you're sharing that, guys, there's a science of selling there. I recently interviewed an author that said it doesn't matter what you're selling. When you give a family options, there's brain science that you have just improved your conversion by 69% by giving options. Because when they pick an option, you gave them options, they were able to shop within your platform, and now they own it. Like, it wasn't you that pushed them into it, they own it. So there are always options.
Yes. So this is an example, right? I gave an option of 2.875%, what the payment is, what the cash to close is, and I gave an option at 2.625%, what the payment is, what the cash to close is. So that's just a really basic example. I rarely ever give one option, ever. So that this is just an example of showing them, and then the conversation is real simple. Like, if I already walked them through the first column, it's that, hey, in the second column, you'll see 2.625%, slightly lower rate, slightly more cash out of pocket. And it really doesn't matter which one you pick. It just depends on what's most important to you and how long you're going to be in the home. If you have more questions about that, let me know and we can set up a time to review it together. I'm going to pause here and I want to explain why. If you notice, I've said that on each one. Hey, if you have more questions about that, set a time. I actually want them to ask me questions, you guys. You can't have influence over anyone if they just go, like you can't. I think that a lot of times we think that this should just do all the work and it should make it obvious for people. I actually use it as a tool to get more communication. The best communication you can get from this is that, hey, the numbers look great. no questions. That's awesome, but just you want to invite questions, especially when it comes to low rate, higher cost. You want to encourage that so you can have that good conversation with them one-on-one. I don't like to get into here's what happens and how mortgages are traded and this is why the rate is on this day. Like, I don't like to get into that. I like to keep it simple and answer the questions they have. And I do walk them through some countering objections, of course, or education through this process in advance as I'm going through it in my video. I am addressing a lot of the stuff that is common, like, oh, why, the rate's lower, but it looks like the cash to close is higher. Yes, right? But I always say that there's not a right or wrong option. Right. And then I would end this video, and I did, it's down here below. If you can see, all my videos are like a minute and a half or less, by the way. Okay. So that I would say, hey, so I'm going to pick the 2.875% option to get loan disclosures out to you because you're in contract. But please remember, in no way, shape, or form is that a commitment. We can make any changes that you want, whether it's increase your loan amount, decrease your loan amount, choose a different interest rate during the process. I just have to pick one to get the process started so we can stay in compliance and get your appraisal ordered. So I'm already leading them for a disclosure. I don't ever wait for anyone to tell me what to disclose at, ever, 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 because
So
that's a waste of time.
love this, brother. So one person asked, how long does it take for you to create a total cost analysis?
Probably takes me about 5 minutes from start to finish.
Got it, guys. That includes a 1 to 2 minute video.
Yeah.
We do integrate with just about everything, but you need to have an enterprise edition for that. Our broker edition for one loan officer. That's what Jeremy uses, and
Yep.
you can do anything and everything in 5 minutes or less in Mortgage Coach. We will put a link down for anybody that wants a demo, and we'll also put a link in down for anyone that just wants to sign up. It's $120 a month. And no commitment. Jeremy, you think that Mortgage Coach is a good deal for loan officers?
Stupid deal. Yeah, I mean, I pay for it for all of my loan officers that work for me in the branch. So yes, I think that that's a great deal. Whether they use it or not, I don't follow up with them. I should more, by the way. I'm gonna do that. I'm writing that down as my to-do today. How many people are using it every time? To-do MCLOs.
And by the way, my one upgrade, don't just ask them how many apps go, how many credit reports did you run? That's how
Cool.
many total cost analysis you should have.
Yes, 100%. So, Dave, I know that we got 10 minutes. Like, I want to make sure I answer questions for people or go in any direction that you want, because I feel like I could talk for 3 hours right now.
Well, I want to make sure that one gift comes out. Are you still asking everybody in process for a referral when they say thank you?
Yes, it is 100% what I'm focused on last year and this year still. Okay.
So share that, because that still blows my mind that we've promoted that. I get a lot of success stories, but every loan officer's not doing it.
You guys,
So why don't you act like you're talking to your team, all the loan
yeah,
officers you run, and tell them what they should do and why they should do it.
sure. So, let me see a show of hands. I'm pretending that Dave's an LO and we're on a Zoom meeting. Let me see a show of hands of anyone who would like to duplicate 50% of their pipeline every month for next month. Show of hands. Who would like to duplicate what you have right now, 50% guaranteed, right, from clients you already have? Everyone always raises their hand.
So
Cool.
yeah, so if you got 10 loans in process, that's 5 loans next month. If you got
Guaranteed.
20 loans in process, that's 10 loans next month.
Okay.
Just to make sure everybody got the math.
Yes. So basically, current client referrals. So current clients are defined as people who are in process, so the loan is disclosed. Okay. It's in process, the loan is disclosed, but you haven't funded the loan yet. Okay. That's if we get a referral from those people, that's a current client referral. All right. I love this. I'm a freak about it. And current client referrals are the easiest to get, but they're the most elusive because we're so focused on just closing the transaction and then asking after for referrals. Like, we don't feel like we've earned it yet. Okay, that's the biggest mistake I see LOs make. Now, when I got really focused on this last year, it was a hack because, as I said, I knew that my prospecting was going way down, and I was like, how can I prospect to people that are right in front of me? And so what I do is I look for celebration points in the process. And a celebration point to me is anytime the borrower is happy. That's it. That's the definition. Anytime the borrower is happy. If they give me any type of praise, like an email that says, oh my God, thank you so much. You and Don and the team were so great. It was so easy. We can't wait to be homeowners. We're so excited. Like anything that is positive that they send to us, I have an email template that I send back to them that simply says, we love helping you. New paragraph. Can you help me with something? New paragraph. This year, I'm looking to work with people I like, in bold. Okay. Would you introduce me to 2 people that could use my assistance in the future? That's it. You guys, this month, or I should say last month, because it's a new month now. So last month, I got 28 CCRs, 28. So I got 28 referrals from people that I was already in process with, right? That hadn't even closed yet. Those CCRs, by the way, convert at 68% for me. Those referrals convert at 68, the highest out of all of my pillars that I track. They convert at 68%. Now, there's reasons for that. Oh, I talked so much I almost choked on my dry mouth. All right, so there's reasons for that, okay? The reasons is that number one, people refer typically like people. So if you have someone who's in process and that's qualified, I have found that they refer people who will be qualified. Okay. Number two is that when they refer you, when they haven't even closed yet, they're at the peak excitement level. Okay. So when you're really excited about something and you explain it to someone else, let's just say that I'm eating the best pizza I've ever had in my life. Right. And Dave texts me randomly and I'm in the middle of the eating pizza. Here's what my response would sound like. Dude, I'm literally eating the best pizza I've ever had in my life. You have to try it next time you come down. The Loma prosciutto is unbelievable. They do dollops of pesto sauce on it. Like, it is just blowing me away, man. I can't wait to share it with you. That's how it feels when they refer you, because they're really excited. All right. So you get the highest level of referral as well. And it's just a simple email template, right? It's just a simple email template. So whenever someone raises their hand, says you're great, this is going good, etc., hit them with the email template, and you will see your current client referrals absolutely skyrocket.
So guys, there's never been a bigger no-brainer than that. There is a video in our YouTube channel called Jeremy Forcier. We love helping you. This is what the email looks like, guys.
Yep.
Super simple. Make it a signature and you'll get value. So never been a better idea, never been an easier idea for everybody to implement. So Jeremy, we got just a couple minutes to close it out. Give us a good realtor script. If I'm a loan officer and I'm all pumped getting off this call, and I know I got to make the pivot to purchase, ring, ring. What are you going to say to get engaged and get meetings with realtors?
Sure. So context is important. I know I say it all the time. It's like my autism coming out. So context is important. It depends on how you know. It's a cold call. Is it a?
Let's cold call. Let's give a gift to new loan officers
Awesome.
that need
Cool.
to cold call realtors. Or, I mean, it might be some type of warm call, but we're talking someone that's either struggling or new. Give them a piece of gold.
Cool. Hey, Dave, this is Jeremy Forcier with Cross Country Mortgage. How are you?
I'm good. How are you?
I'm doing good, man. How is 2020 for you?
Busy, really busy.
Yeah. How many transactions did you have fall out?
How do they usually? I don't even know how to answer
So
that.
see, just so you know, that is called a game changer. It's a pivot where you make them think. It's called a pattern interrupter. Okay. And you can do thousands of them, but that's one. If you force them to think about something, it's a pattern interrupter, right? And they're forced to think about
Do
something.
they usually answer that? Like, are they gonna?
Yes, absolutely. I mean, some people will blow you off, by the way. Some people are like, I don't got time for this, right? Oh, well, that's fine. But people will answer. The most common answer is, I don't know.
Okay, I don't know. Let's go.
Cool. So the purpose of my call is that I've found that people don't track things and they don't really know, specifically in real estate and mortgage, how much fall out. And I also have found that 30% of the deals that I did on the purchase side last year were actually turn downs from other lenders. So I wanted to schedule a time with you, whether you have time right now or we can schedule a time to chat and take a look at how many deals did you have that fell out on the listing side or the buyer side. And I would love the opportunity to show you our process on how we can help with those if they're working with someone else, so that we can see if we can give them a second shot.
Boom. So guys, this has been an awesome hour. There is one of the most watched videos in Mortgage Coach history. It's called Jeremy Forcier's 5 questions that he asks every realtor. Make sure you guys check that out. I think we did a couple interviews last year that were just realtor scripts.
Yep.
So guys, and there's a Jeremy Forcier playlist. So like if you want to like listen to Jeremy to get more realtor scripts, his counter punches, the guilt script. You're not probably do that very much right now because it's COVID, but
Yeah.
there's a lot of good scripts in the mortgage coach community. Jeremy, man, I super appreciate you. I appreciate your time. Thank you, brother.
Love you. Love all you guys. Hey, use total
Love
cost
you.
analysis every time. Change your life. Talk to you soon.
Share this with your friends. Give us a like. Take care, everybody.